Hey guys, it's Stephanie Mitchell here. I'm an online marketing coach for beauty business owners, and I have a special guest today who is going to talk with you all about money, budgeting, and taxes for your beauty business. So at the time that I'm recording this, it's June and tax season has just finished. Many of us were hit with a tax bill, and some of us were like, oh my goodness. I don't know if I can afford to pay that, and I definitely don't want to be stuck with this same stressful problem next year, which is that stressful, heavy feeling when it comes time to pay your taxes. Fortunately, we have Kenesha Coleman here with us today, who is called the Beauty CPA. She helps hairstylists, estheticians, salon owners, beauty business owners to plan for their money. Today, we're going to talk about her secrets to budgeting for your taxes, how to save on taxes, how to increase your profit margins, how to pay yourself well, how to budget for the lifestyle you want, all that good stuff when it comes to money in your business. This is something that so many of us gloss over because we say we're just not money people. We don't know about numbers, but Kenisha is going to break it down so simply, and she'll help you understand how to be better prepared for your taxes next year. All right, let's get into my interview with Kenisha. Kenisha, thank you so much for chatting with me. I'm really pumped up about our talk.
Absolutely. Thank you for having me. I really appreciate it.
Yay. Okay, so we're coming at each other at exactly the right time. Tax season just finished, and we were just chatting about it beforehand of like, oh my gosh, just because tax season is over doesn't mean that the talk about money and budgeting and taxes needs to end. So like, I feel like this is actually the perfect time to be talking about this. So before we get into our chat all about finances and budgeting and money in the beauty industry, can you maybe tell us a little bit about yourself and how you started out helping beauty businesses with their finances?
Absolutely. So I have about 13 years of tax and accounting experience. And it's like so hard to say that because I'm dating myself a bit there. But yeah, I got about 13 years. Right when I left grad school, I went right into the IRS. I had
Did you
spent
like
eight
study
years.
accounting in university or college?
Yeah, so I have a bachelor's and a master's in accounting. And right after grad school, I went right into the IRS to be an auditor, right? So
Wow.
I'm auditing small, mid, large size businesses. And I really, really fell in love with tax at that point because the training is really good and they throw you right in, right? So I'm like 22 sitting right across from like the CFOs of Fortune 500
Yeah. Were
corporations.
you like making people sweat kind of? Like you're meeting them at a very stressful point in their lives, I think.
No, absolutely. Because I mean, they got like a whole company to run, and here come little old me saying, "We got some questions about your tax
Yeah.
return." But it was there that I really fell in love with tax. And two big things I took away from that experience was one, the wealthy and the big multinational companies, they fare the best when it comes to taxes because they can hire out to tax lawyers and CPAs to get the best strategies and do it
Hmm.
for them. Okay. The small business owner, they pay way more than they should simply because they just don't know.
Hmm.
Simply because they just don't know
Yeah.
and they may not think they can afford to hire out for the help. Okay. And so besides that, and it's a very confrontational job, as you can imagine. I said, you know what? I want to be more on the helping side. Okay. I want to be more on the helping side. So I left the IRS. I went and worked for other firms and corporations. But ultimately, I started my own accounting firm called Coleman Tax, where we exclusively serve beauty entrepreneurs because I wanted to democratize that access to that information to save on taxes. That
Yeah.
shouldn't just be for rich folks and multinational corporations. That should be for everybody, you know?
Yeah.
So I really wanted to democratize that and make it available for the small business owner. I specifically niched in beauty because I just have an organic appreciation for that industry. Like I know how certain beauty professionals has helped me along with, you know, just enhancing my true beauty, self love, and the fact that let's just be honest, when we go get a haircut or get professional makeup, or we have this glowing skin from this regimen recommended by our esthetician, when we look good, we feel good, and when we feel good, we kind of move through life a lot differently and make better choices. Okay. So it's not really, I like to remind beautypreneurs what you do is not all vanity. It really does have this intangible internal effect on people. You know what I mean?
Yeah.
So that's why I chose to niche in beauty, because I do have like this organic appreciation for what beauty professionals do.
Oh my gosh, I love that. So did you essentially just like, you started Coleman Tax and you were like, okay, I love working with small businesses. I love, the idea of working with, beauty entrepreneurs, estheticians, hairstylists. Did you just essentially start going out and being like, hey ladies, like I offer tax services. This is who I am. And did people kind of be naturally drawn to you because they're like, oh my gosh, like Kenesha knows her stuff and she's here on
Yeah.
our side?
Yeah, no, I'll be honest with you. So it was like, I remember when I first went out on my own, I freelanced to kind of get a feel for it. And I'll be honest, I took anybody with $1 at that point. But when I really kind of like started to become more formal with my business structure, my business model, and then I decided to niche in beauty professionals. At first, it was just all local. I was based in Illinois at the time. It was just all local, and on that scene, I had a bit of success, I would say, for myself. But it was really the pandemic that did it.
Right.
Like, um, pandemic was not good. Pandemic was bad. It was COVID. It affected everybody pretty negatively. However, for me, when everything shut down and everybody was just at home, it was the first year I started an Instagram account. And then I cut that camera on and just was talking all year, that whole pandemic year. And I really I was able to make an impact and get greater reach through Instagram the year of the pandemic.
Yeah.
So that kind of really spiked a huge growth within the firm for us.
Yeah, I love that. Instagram has been so amazing. And I love all the content that you put out on Instagram about like finances and budgeting and taxes and all that stuff. So you've worked with a lot of different, I guess, larger salons, maybe solopreneurs like suite renters, estheticians, nail techs, you name it. I'm sure you've worked with them. What are some of the biggest struggles that your clients have when it comes to money? They come to you and they're like, oh my gosh, like I'm guessing they come to you like with a certain amount of like stress and pressure put on them. What are some of the things that you see?
Okay, so first off, the first and the biggest one that I hear all the time, especially for the clients that I have now, when we first met, it was, I am not a numbers person. Okay. And that's a mindset thing. That's a mindset thing, because we can be whatever we want to be, whatever we choose to be. But right when you tell yourself that you're not a numbers person or you don't like numbers, you're gonna have this you're gonna have all types of preconceived notions before you even look at your own numbers, and that's preventing you from taking control and really managing them.
Yeah.
Okay, so that's the biggest struggle: mindset, thinking that you're not a numbers person, and then that prevents you from really taking control over your numbers. Once we get past the mindset and we start looking at the numbers, the second biggest struggle is understanding what those numbers mean. Okay, a lot of my clients was doing bookkeeping or having someone do bookkeeping just for the sake of bookkeeping, right? Like, we just do bookkeeping because like we were told we should. No,
Exactly.
we gotta do bookkeeping and look at those numbers to really understand what they're telling us, right? So how much are you making? Is it profitable or not? What is the tax on those numbers? Is your pricing too low because you're not hitting your money goals? Things like that. Because again, we can control all of this. It's not happenstance at all. Okay. So those are like the biggest three struggles: the mindset, thinking you're not a numbers person; two, then understanding what your numbers mean, right? And then three, taking that information and actually using it to make good decisions within your beauty business.
Yeah, yeah. I definitely identify with the not a numbers person thing, especially I think especially when we're first starting out, the numbers that we're dealing with tend to be small. But then as you start growing your business, you look at your bank account and the number, the cash is going up, and then it sounds like a good problem to have, but it also creates like a certain amount of panic of like, oh my gosh, now what do I do with my money? Like, how much do I need to set aside for taxes? Am I actually profitable? How much can I afford to pay myself? All that stuff.
Yeah.
So specifically about the end of tax season. I'm guessing that like it was a crazy busy season for you. You were helping everyone like prepare their end of the year reports, like to submit to the IRS and everything. What happens after? Did like a lot of your clients feel like, oh my gosh, like I'm hit with this huge tax bill and now I don't even know, first of all, if I could pay it, and second of all, like how do I actually make money when I feel like all my money at the end of the year, like all the profits that I built up are just getting paid out to the government?
Yeah, for sure. So I have like two little groups of clients within my firm, right? I have a group of clients that are with me all year. I do their bookkeeping. We're looking at taxes on a quarterly basis. We meet often to look at the financial statement so we can analyze what the numbers mean. Then I have a group that only come to me once a year between January and April to get that tax return done.
Yeah.
Okay. So for the group of people that stick with me all year, they're good. They're fine because we've been monitoring the situation all year. So come tax time, there are no surprises. We already knew how this is going to turn out. We
Yeah.
prepared for it, and that's that. But for those once a year clients, oh yeah, we had some surprises this year, and it's just like it was kind of like a double-edged sword. Like, oh my God, I made that much money. I'm so happy.
Yeah.
And then it was like, oh my God, I owe how much was that money? Like,
Yeah.
what? So, it's kind of like the pain that you are feeling from looking at that tax bill. I want you to use that as motivation to say, okay, we're almost halfway through the year now. What can I do between now and the end of the year to make sure that this doesn't happen again come 7 months when, tax season 2023 starts?
Yeah, yes, absolutely. So let's talk about that. I love what you said at the beginning about like the wealthy individuals and the CEOs of those big companies that you were like auditing when you were at the IRS. You realize that these people actually pay a lot less taxes and are more planned for it because they hire somebody who actually like manages and plans this stuff for them. For those of us who don't have someone like that, or maybe we're thinking like, oh my gosh, maybe I do need someone like that. What are some of the like things that you see that people are missing that they can put in place that apply both to like those wealthy individuals and like a small business owner that will help them plan for next year and not be like, oh my gosh, my tax bill when it comes time for
Yeah.
2023?
Yeah, absolutely. So, and I got like a whole tax planning framework. Um, I won't go through every step now. I'm just gonna hit like the highlights of what I
Yes.
specifically saw this season. So, number one, and this is something you can even do if you haven't filed your tax return yet. Number one, the entity structure. So most solopreneurs or small beauty salon or spa owners, maybe it's them and a couple of team members, they are filing as a sole prop or LLC on a Schedule C on their tax return. Well, if you find that you have like a, really high 4 to 5 digit tax bill, you are probably very close to being ready to switch entity types to being an S corporation.
Right.
So think of in terms of just entity structure. If you have a tax bill under this entity structure and it's very, very high, just think to yourself, I wonder what it could be under a different entity structure. Could we possibly lower the tax bill in that way by switching?
Is
Okay.
there kind of like a threshold of like when it's smart to switch?
There is no like statutory law threshold, but I have one in mind I can share.
Yeah.
If you are hovering between 30 to 40K in net profit. Okay, this is net profit. So all your revenue minus all of your expenses. If you're between 30 and 40, you should definitely run an analysis or have someone run an analysis for you to see if you can save on self-employment tax by switching to an S corporation.
Okay, that's good to know.
That is like low hanging, and when I say low hanging fruit, I don't mean it in that it's easy, non-complex, or not a big deal. It really is, but it's just like such a simple tip for me to give right now is to say explore switching entity types.
Yeah.
That's what I mean by low hanging fruit. And
Right.
I want you guys to always think in that term. Okay. The second
Oh,
thing,
sorry, Kenisha, before we go on, when you become an S Corp, because in Canada it's different, but I'm assuming I understand like what the two different things are. I'm guessing that there are different obligations when you're an S Corp than when you're like a solo or LLC. Like maybe you have to file your taxes differently or you have to pay certain things.
yeah, yeah, absolutely. Okay. So when you switch to an S corporation, the way you save on taxes is because you don't have to pay any self-employment tax. That's the way
Right.
you save. But when you're actually filing the return, yes, it does involve a separate tax return. So here in the US, it's called a Form 1120S. Okay. And then that return will feed information down to your individual 1040, and that's where you pay the tax. You
Okay.
normally won't see a tax bill on the actual S Corp tax return.
Okay, that's good to know. All right, sorry. Thanks for clearing that up. Okay, what was the second thing? The low hanging fruit or the things that we can do to help,
Yes,
plan for next year.
absolutely. So, for whatever reason, beautypreneurs are still not taking home office deduction. Okay. And they can. Someone told them they couldn't, but you definitely can. And then, secondly, because you can take home office, you also can deduct your commuting miles between your home office and your workspace. Okay.
That's good to know.
So those are two very easy ways to turn some personal expenses that you're going to incur anyway into a tax benefit.
Right. Got
Okay.
it. Okay, and what about like, are there other things that they can do? Maybe like they've already filed their taxes for 2021, but they're thinking like, oh my gosh, like what can I do to start making sure that for next
Mhm.
year, like
Mhm.
planning, all of that stuff.
Yeah, yeah, no, absolutely. So again, look at we're halfway through the year now. Look at your net profit. If you're already at 30, 40K, you should just switch
Yeah.
now. And then make it retroactive. Make when you make this election, you're gonna make it retroactive back to being considered an S corp from the beginning of this year.
Right.
That's one. Two, obviously keep track of home office in miles. You have to track the miles, guys.
Yeah.
Track the miles, okay? Three, this is the last year that you can buy things that you can use for your business, like equipment, furniture, maybe even a vehicle, right? This is the last year you can buy it and completely write the entire cost off.
Right.
Okay. Next year, that rate is going to dwindle to 80, then to 60, then to 40, and so on and so forth. But this is the last year you can write it off completely.
Okay,
Okay.
so maybe purchase a vehicle that can be used in your business.
Yes, absolutely. And then we can't forget our self care, right? Let's contribute to our retirement plans. If you don't have one already, please set it up because instead of giving that tax dollars to the IRS, you can make the contribution to your future self for retirement and get a tax benefit from it. Same thing with health insurance, different types of health insurances, right? You are making these premium payments, you can totally deduct the cost of that policy through your business, okay? And get a tax benefit that way as well.
Nice.
Those are some of the by far the easiest things to get a tax benefit from that you have to do anyway.
Yeah, that is so good to know. Okay, so let's talk about budgeting, like how we actually manage our finances going forward and manage like our pricing and our profits and all that stuff. What are some of the ways that you suggest to your clients to like change the way that maybe they structure what they do with their money on a day-to-day, weekly, monthly basis so that they're more prepared for tax season?
Absolutely. So I always say, like, when it comes to money, it's not by happenstance, right? And you cannot manage what you aren't tracking. All right. And that's where the budget and the bookkeeping come into place. Now, before we can even go to budgeting for a business, you have to have one set for your personal life, right?
Yeah.
So I always get the question from beautypreneurs, what can I pay myself? And
Yes.
and then I throw that question back at them, what do you need to take care of yourself? Right? Because those have to be aligned.
Yeah.
So before you try to think, okay, what is the money I can pull out of my business for myself? that has to be based on what you actually need, and you don't know that until you do your personal budget. That personal budget obviously should include all the bills and things that cost to sustain yourself. And I want folks to remember two things: add on a layer for savings
Yeah.
and add on a layer for play money. We're
Yeah.
human. We
Yeah.
want to play. We want to we want to work hard, play hard. So don't
Mm-hmm.
forget that part either, right? Now, once you have that amount, that's going to be the beginning of your net profit goal from your business. At least you want that to be able to pull out your business to take care of yourself.
Yeah.
Okay. And then you want to say, okay, how much out of all this money I'm making in revenue, how much of that do I want to bring home for myself? And if that percentage is 50%, 40%, that's how you're going to build your business budget working backwards.
Right.
Okay. Set the net profit goal and then work your way up. And then that's how ultimately you're going to get to your money goal. Now,
Yeah.
I'm going to give you right now some benchmarks. Okay.
Okay. Yes.
Salon benchmarks are small. Okay. The average salon making under a million, their net profit percentage is 15%.
Yeah.
It's 15%.
Yeah, that's
Okay.
after they pay like all their employees after I guess even like the salon owner and manager have been like paid and everything like that.
Absolutely. Yep, absolutely. It's 15%. The gross profit formula is all the revenue you make minus all of the expenses directly related to what it takes for you to provide the service or the product. Okay. That percentage for the beauty industry is 40%. Okay.
Okay.
So use those as benchmarks to just compare how you're doing to your peers in the industry. But if your goals exceed that, which they should, might I add, great, great. If they exceed that, great. And I say stick to that goal if it exceeds that. But those are the benchmarks, those are the minimums. Okay.
Yeah.
If you're falling below that, you got some work to do. Okay.
Yeah.
And if you're performing above that, good for you. Lean more into what's working.
So when you said about like the beauty businesses and the 40% profit margin, gross profit margin. So essentially, let's say like the total revenue for the year is 100,000. That
Mm-hmm.
means that we're assuming that their cost for like renting their space, all their utilities, all the products, the technology,
Mm-hmm.
tools, everything is 60,000 and they're left over with $40,000. Is that what I'm understanding?
Yeah. So let's use your 100,000. Okay. And then let's say they're an esthetician and they get facials. So all of the materials it costs to provide that facial to the client. So I don't know, cotton swabs, the actual facial you're putting on the product, gloves, things of that nature. Okay. All the costs directly related to the service. That's going to be the gross profit percentage.
Right.
Okay.
Do we
So
include
again,
our rent in there too?
no, rent
Okay.
is strictly overhead.
Okay. Okay, got
Yep.
it. So so the gross profit is essentially we're profiting at 40% directly with the cost related to providing the
Yep.
service. Then okay, so sorry, is the 40% the profit or the cost? I messed up there.
Mm-hmm. The 40% will be what's left over.
What's left over? Okay.
Yep. After you subtract the cost that it takes for you to provide the service.
Okay, and then on top of that, then we have all our overhead, our yearly, monthly
Yes.
overhead, our
Yes.
rent, our utilities, all that stuff.
Yep.
So what that adds on like another what, like 20%?
Yep. Yep. That's like another 25. That's why that 40 drops to 15
Oh my
really quick.
goodness. So
Yes.
then that 15 is what we can pay ourselves essentially. So that
Yes.
and if we're making $100,000 at the end of the year, we can afford to pay ourselves 15,000.
Yes.
Oh,
Yes.
oh wait, but there's also taxes too, right? Like how do
There's also
we
tax on that.
Yeah, so how do we deal with that? Like, so of
Yeah.
that 15 that's left over, then do we have to like dedicate a certain amount for
Mhm.
taxes?
So I have a rule of thumb. I have a rule of thumb. It completely depends on where you live. Okay. Just because the tax that I study and practice is US based, I'm going to speak in terms of like the states,
Yes.
right? So if you live in a higher tax state, we're talking California, Illinois, New York, very high tax states. I want you to dedicate 25 to 30%. Because remember, you got to pay tax to the IRS in your high tax state.
Right.
Okay, so that's why
25% of that, not of like your full revenue, of that 15% profit
yeah.
margin.
Yep. Then, but if you are in a lower tax state, like Wisconsin, I used to live in Wisconsin, they have a very low tax state. You can get away with setting aside maybe 20%.
Okay.
Okay. Now, I want everybody to keep in mind that when you take this net profit, I'm going to use the same example, 15%. When you take this and you put it on your individual tax return, right? You're still going to have other deductions. You're going to have other deductions like for you have your a standard deduction for yourself. You get lots of credits if you have children. You get an even higher deduction if you're married. There are other things you can do in your personal life to just drive that profit down, right? Because the tax bill is ultimately determined. It's a percentage of the taxable income. We
Right.
drive down the income with deductions. And there's so many deductions and credits out there. Okay.
Yeah. This is for, sorry, this is the structure for how you do it if you are an LLC.
A LLC or a sole proprietor. Yes.
Yeah, okay. And then
Yes.
if you are an S corp, then essentially you take that, well, you have to like set aside money, I guess, for taxes, and then you take whatever's left and then you can pay yourself either as like dividends or a salary, I guess.
Oh my God. So S corp, it gets more complex when it comes to
Yeah.
S corp, right? So because the S corp has its own tax return, right? You are going to have your income, and then you're going to see it decreasing with all the business expenses you've been
Mm-hmm.
paying. Then you're going to have your net profit. Now, as an S corp owner, you have to pay yourself through the S corp. So you're actually going to be like an employee
Yeah.
of your business, right? And so you're going to get like a regular paycheck every other
Mm-hmm.
week. You're going to pay yourself a reasonable wage. And when you're getting paid, they're going to take taxes out of that paycheck. Okay. So that's going to be synonymous with you setting aside this tax as a sole proper LLC. Now you're just doing it through your wage as an S
Okay.
corp.
Got it, got it.
Okay.
Okay. So
Right.
there's so much that goes into it. And guys, if this is kind of like this is tickling something in your brain and like, oh my gosh, like I feel like I need to do something like this, but I don't know how. I'm gonna put Kenisha's contact information below and her website and everything so that you can get in touch with her and get her help because yeah, it's complex and Kenisha can help you plan for this on how to structure it and all of that. So let's go back to that like 15% profit margin. Let's say like best case scenario, you're paying yourself after like, taxes and all that stuff. Let's say you're paying yourself like 12%. So you're paying and you make 100,000. You're paying yourself $12,000. And I mean, that's great when you're first starting out because it's so rewarding to like give yourself that first paycheck and any money that you can pay yourself is great. Maybe after your first year, you're like, oh crap, like I thought I would be making more money personally. Like I thought that making six figures in my business would mean that like I'm doing well. What kind of things can we do to actually bump up that,
Yeah.
bump up that how
Yeah.
much we're paying ourselves? I mean, I feel like we deserve so much more than that.
Yeah, no, I agree with you. And remember, that benchmark is an average,
Yeah.
right? So that is dry. People that are not performing well are driving that down to 15%.
Yeah.
All the clients that I have in my firm, they're like triple, quadruple that 15%. They're
Yeah.
bringing home much greater profit margins. So some of the things we can do, again, remember I said you can't manage what you aren't tracking. So
Mm-hmm.
if you're not doing bookkeeping, start doing bookkeeping. You can either learn it for yourself. There are very, very user friendly DIY applications out there for you to learn how to do it yourself if you don't have a lot of volume, or find a bookkeeper to do it for you. but do it. Soon as you do it, then you can start producing financial statements every month and you can start seeing where this money is going.
Yeah.
Okay. When I get new clients that's never done bookkeeping before, and we first time they see a financial statement for their business, they're not realizing they're spending, you know, 2,000 a month on meals, on Starbucks or Panera or something,
Yeah.
you know, or they're not realizing they're spending so much money in certain areas. They forgot that they subscribe to this and they don't even use it, but they're still subscribed. So we're able to really quickly cut expenses, like really quickly, because they can see it on paper and they know it's there and they know they don't need it. So we cut it. That is a very simple and easy way to boost profit by double
Mm-hmm.
digits. It's by analyzing the financial statement and cutting costs where you know you don't need it or aren't using it.
Yeah.
Okay. Secondly, I think that we have some pricing issues in the
Mm-hmm.
industry. We have pricing issues.
Yeah.
So that's when the gross profit margin comes into play, right? For what you're charging this person and for all the materials you're using to provide that service, is that service as profitable as you would like it to be,
Yeah.
right? And then more
And I
times than not,
guess, sorry to
no.
interrupt, but I guess people realize once they do that exercise of like realizing what they probably didn't even know that it was so unprofitable until they
Yeah.
actually dig into the numbers. And so many people don't dig into the numbers.
Yes. They didn't know. They just didn't know. So that's why when we get, well, not, I won't say get over, like it's an easy thing to get over the numbers thing. I feel you. I've been there. Okay. Not with numbers, but with other things. So I understand mindset issues. Okay. But when we can work through those either ourselves or with a professional, and we start to look at the numbers, so many epiphanies you're going to have.
Yeah.
So many, like, information itself is so valuable because now you know, and now you can make the decision that will increase net profit for your business and
Yeah.
take home money for yourself.
Absolutely. So last question for you. Those are some of the things that we can do to make sure that like we're boosting our profits. Once we're boosting our profits, then we also, will be paying more in tax, but it's okay. But what can we do? Like, do you recommend that? How do we start planning for like what we're going to be paying next year? So do you like recommend to your clients that they like set aside money every month for taxes, or like how do you do that?
Yeah, absolutely. So, and I'm sorry if I sound like a broken record, but we got we got to do bookkeeping.
Yeah.
And I keep stressing this because it tracks everything.
Yeah.
And we can only manage and plan for what we track. So as soon as you got the bookkeeping in place and you're producing the financial statements every month, what I want you to do is you're going to see your net profit on your income statement, or some people call it a profit and loss statement or
Yeah.
P&L. When you
Do you use QuickBooks for that?
I do. I
Yeah. I
do. I
recently
use
started using it
QuickBooks.
and I was like, oh my gosh, why didn't I do this before?
Yeah. Cause all right, so just a little sideline, and I do not get paid to say this. We use QuickBooks exclusively within our firm
Yeah.
because it's such a powerful app that connects to so many different things that just makes bookkeeping so easy
Yeah.
and straightforward for you. If you got a business bank account or credit cards, you can connect that thing to QuickBooks. QuickBooks will do most of that work for you.
Yeah, absolutely. Can you make
Yeah.
it? This is like a personal question, but like, not a personal question, but like for my own interest, can you set it up so that QuickBooks sends you an email every month saying like what you made, what you spent, and like what your margins are?
No, because there is the reason why it can't do that, because it can't do that after the reconciliation. So you got
Okay.
to go in and you got to like reconcile and close the books first,
Oh, okay.
and then the financials will produce themselves.
Okay.
Um, but so you got to do that. But I'm telling you, Intuit, which is who makes QuickBooks and
Mm-hmm.
TurboTax, Intuit is such a powerful fintech company. I will bet in the next couple of years that will be possible. It's coming.
Oh yeah, I would love that. It just seems like something that would be so
Yeah.
useful. So we use QuickBooks or another software. We know monthly like what we're
Yes.
making. We've closed our books every month. And then
Absolutely.
how do we plan for like how much to set
Yes.
aside for taxes?
So your net, so once you get your income statement and you see your net profit there, that's when I want you to set aside that rule of thumb I'm giving you guys. So if you're in high tax state, set aside 25 to 30%. And then if you're in a lower tax state, 20% is just fine. Set that aside in a different account, out of sight, out of mind.
Every month, or do you do it like how often do you do that?
Do it a month. Do
Okay.
it every month because that's the frequency in which you produce your financials. I want you to do and look at your bookkeeping every single month.
I don't do
And
that.
then the last step,
I know I should, but I don't do that. I'm like, so again, you that was like the first thing you said, like people tell themselves they're not a number person. I tell myself all that time and I need to look at my numbers more often.
yeah, no, no, for sure. So that last step in the like the bookkeeping, like step monthly steps, that last step every month, look at that net profit and set aside your taxes. Separate account, out of sight, out of mind. With my clients, we have them set up so that the bank will do an automatic transfer just out of
Mm.
the account. This certain percentage, just set it aside so that it's just in this account. And then when the quarter closes, you can send in your quarterly estimated tax payments to the IRS. That's another thing I think is forgotten in the industry is that if you don't want to see a five-figure tax bill at the end of the year, you should be paying in quarterly anyway.
Yeah, yeah. I realized when I like opened my business here in Canada that they actually make here it's different, but like they estimate your tax bill for the next year and they make you pay it monthly, but not the full amount. Obviously, it's going to be more than that because your business grows every year usually.
Yeah,
But yeah, and at first I resented it, but then I'm like, oh, it actually makes it so much easier
yeah,
because I
it
owe
makes it
less.
easier.
Like I don't have to pay a huge chunk in April.
Yeah, yeah, exactly. Like the tax bill is gonna be what it is after you've done your planning, but just to cut down some of that pain of making such a payment, if you
Yeah.
pay into the system quarterly throughout the year, come April next year, you have done almost all the work. You may
Yeah.
have a couple, just one little payment left to make it. That's it. And so we're required to do that, and I think everybody should remember that by law we are required to do it.
Yeah,
We are. I mean,
absolutely.
you won't go to jail if you don't, but still, it helps. When we get to the end of the year, it helps for cash flow purposes. Like besides tax, it helps
Mm-hmm.
for cash flow purposes because you don't want to get to April and you owe $15,000 and you're like, oh snap, I had plans to do something else with that money,
Yeah.
not pay taxes. So it's like, it's like a domino effect. We won't want to get into the habit of owing them so much money every single year all at once.
Yeah. Thank you so much, Kenisha. I have learned so much. Honestly, like I know you're in the US, I'm in Canada, but this applies to so many different businesses. And I know that there are so many independent beauty pros out there who are like, I need help with this. Like, this all sounds so good. And I want to be one of Kenisha's clients where I'm like, I'm planning and I don't freak out at the end of the year. If someone wants to work with you, what are their options and how do they do that?
No, absolutely. So my website is thebeautycpa.com. We have a book your call button on the website. It'll take you to like a short questionnaire so that I can get to know you and your background before we get on the call. And then it'll take you right to my calendar so that we can get on a 30-minute call. We can discuss you and your business. And I really love to give value. I
You
really, really
do.
love to give
I
value.
This has been
And
so valuable.
and so I promise every call I have, I at least give them some takeaways that they can use in their business, like right away for quick wins. Even if they don't decide to work for me, because I think this information just should be available for everybody.
Oh yeah, absolutely. It's so
And
important.
then,
It's sorry, what were you
oh,
gonna
sorry.
say?
And then besides my website, you got the Instagram account at the Beauty CPA on Instagram, where I have like just a ton of videos and posts on things to be doing in your business for tax and accounting. But
Yeah.
those are ways to get in touch with me.
Amazing. Thank you again so much, Kenesha. I loved this chat. You are so amazing for helping small business owners in the beauty industry with this. So I appreciate your time so much. All right, guys, thanks so much for watching, and I'll see you again next week. Bye for now.